Imagine this. You pay car insurance every month. You're a safe driver, no tickets, no accidents. You trust that if something happens, you'll be covered. Then one day, everything changes. You get hit, your car is totaled, and instead of help, you get excuses, delays, and a payout that won't even buy you a used bicycle. This isn't bad luck, this is how the system is designed. A woman is driving home from work, a normal day, until headlights appear in her side window. A sudden impact. The car spins, airbags deploy, silence. A reckless driver blows a stop sign. T-bones her car. Her vehicle is completely totaled. She's shaken up, but she has insurance. She calls her provider expecting help. But what she gets? A nightmare. Sitting on the phone with her insurance company, pacing in her apartment, a laptop open to her claim status, under investigation. She's been with this company for 7 years. She's never missed a payment. She's never filed a claim. She thought that loyalty meant something. Her insurance company tells her they need to investigate. Days turn into weeks. She follows up, they're still reviewing. Then finally, a settlement offer arrives. And the amount? Less than half of what her car is worth. This is the claims denial game. Insurance companies delay, deny, and underpay claims because they know most people can't afford to fight back. They lowball you, hoping you'll take it and go away. They stall the process, making you desperate for a check. The longer they take, the more likely you are to accept their bad offer. But here's where it gets even flakier. The woman at her computer, reading the policy she's been paying into for years, her eyes widen. Her insurance said they'd cover replacement value. What they didn't say, they get to decide that value. They're using an internal formula that undervalues her car. They're factoring in her zip code, credit score, and even job title, things that have nothing to do with how much her car is actually worth. This is legal. Insurance companies have entire teams dedicated to finding ways to pay you less. And in some states, it's even worse. A split screen. One side shows a driver in Michigan paying $400 a month for insurance. The other shows a driver in North Dakota paying $80. Car insurance prices aren't based on fairness. They're based on where you live. Michigan drivers pay the most in the country. Florida rates have jumped 88% in 5 years. Louisiana drivers are getting crushed by $500 a month policies. Meanwhile, Vermont, Idaho, and North Dakota, drivers pay half as much. Same driver, same car, different state, double the price. Why? Because insurance companies set their own rates. Because some states let them charge whatever they want. Because there's no national standard. If you live in the wrong state, you pay the price. If you have car insurance, here's how to protect yourself. Never accept the first claim offer. It's almost always a lowball. Push back. Demand a written explanation. Shop around every renewal. Loyalty means nothing to these companies. New customers often get better rates. Know your state's insurance laws. Some states ban credit-based pricing. Find out if yours does. Opt for smaller insurers or credit union-based insurance. They often offer fairer policies than big-name companies. If your claim is denied or delayed, file a complaint with your state's insurance department. They hate being reported. You don't have to accept whatever they charge. Challenge the system. Have you ever been overcharged, denied a claim, or hit with a ridiculous rate hike? Drop your story in the comments. We're challenging this system one story at a time. Protecting the unprotected, fighting for the forgotten.